Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, June 29th, 2021. To streamline this video, we're going to skip the broad markets. There's really nothing new to report, so if you're just catching up, just take a look at my video yesterday. I covered those in the beginning. So we're going to dive into, where to make money. The broad markets are just grinding around, inching up, but mostly moving sideways for months now. So there's really not a lot of opportunity there. But here's what we're going to cover, where I see some opportunities or potential opportunities right now. We're going to roughly this order. I'll try to keep it in this order. Lumber, might hit on crude, maybe do that later. I covered that yesterday. We're going to start out with the cryptos, very quick updates on Bitcoin and Ethereum. And then commodities. I want to talk about general commodity index, DJP, wheat. Wheat's starting to look attractive right now. DBA, that's a ETF that tracks agricultural companies. Cocoa, and then not related, but REITs, and maybe I'll cover the REITs earlier in the video with commodities. Let's just start here with Ethereum. Nothing much to update since this morning. Ethereum was posted as a long trade idea here. Really liked that one it was right about a week ago or so. That 2244, which remember was my downside target. We were bullish and long back here, then got short here, or mentioned that as a sell signal and laid out this target. And I still think, as I said in the update, I'd still put decent odds that we're going to come down ultimately and hit that my max downside target, about 1734 or so, plus the uptrend line right here. But as I mentioned, we had some bullish developments recently. One of those, PPO line looks like it wants to cross over. Sometimes you'll get that what looks like a bullish cross and the lines get rejected. So I'll tell you, if Ethereum's going to turn down, it could turn down here or anywhere up to there. So what I said earlier, these would be if you want to hold out for more, and there's certainly a case can be made for that. Then my next targets or resistance levels, we'll call them targets, 41.13 and then 48 right there, and that's a pretty darn big level if we get there. So it's up to you. It's about a 50, well, actually more than 55% at this point from where it was pointed out as a week or so ago, or about 65%. And again, you can trail stops up, or take the money and run, or a little of both. Take partial profits, let the rest ride. And I can't make a hard case. Certainly, I can't even make a decent case to short it now. I just suspect another leg's coming, and if and when we get up to $48, depending on how the charts look, I may very well go back into a short position. Right now, here's resistance here on the 60-minute chart. That was a daily we were looking at, 37.35, then 41.25, and then potentially 54. Those may not mesh with what I just showed you on the daily, but again, there are levels you can pick up on the 60-minute chart. And you can see, we put in a divergent low on the 60-minute time frame. We broke this downtrend line. I may have added that since this morning. That was our divergence line. So there very easily could be some more upside here. But if we're going to have another leg down, just from my experience, the way this works, just as this rally looks like it's starting to get going and the real thing, and you get all those that got shaken out along the way down, they start getting back in. That's usually when the next leg down starts, and it can start with a bang. So be careful there. That's all. Nothing wrong trailing your stops up. Unfortunately, if you're trading Bitcoin futures are virtually around the clock, or more hours of trading. Ethereum, I don't think there's any futures yet on that, at least I'm not aware of. You could trade the cryptos directly, but if you're trading these ETFs or ETNs that track them, then you are going to be limited to trading in the regular session. These are, I believe, pink sheet or over-the-counter securities. I don't even think you can trade these after hours. I'm not sure. All right, but that's that. That's Ethereum, and then the other one is Bitcoin. GBTC is Bitcoin Trust. As mentioned, already hit my third, and this was listed as a final target. My final preferred swing target all along. It was highlighting this level. That's a potential target if we take another leg down, but that's all I was looking for at this point in time. We hit it, and we put nice divergence, so that that opens the door for a move up here to the second target right there. I have 3364. And you can see we're close to it now, about halfway there, a little better than halfway. We already hit the first target. So we're up about 20, no, about right about 30% so far since that long entry off the 2413 support, 24ish. And with that pretty decent resistance up there at T2. And same story. If you want to hold out for more, these levels right here would be the next potential targets. Resistance that's 39 and a quarter, give or take 42.90 or so right there. And maybe one more right up here. I'm going to add that line just in case this rally gets some legs on it and you are looking for more upside in Bitcoin. All right, moving on. Let's jump into commodities, and let me get the REITs out of the way first. What made me think of that, I've been tracking. I'm from Miami originally. The building that collapsed, just around Miami Beach. It's not my home turf, but it drives things home pretty closely. I've got a few sister-in-laws in the family. One of them, her husband, just interviewed with a guy literally just over a week ago, and he's one of the missing in there. Then my other sister-in-law, her good friends live in the building right next door to it, and she's traumatized. People in that building. So it's kind of I've been kind of tracking that. It's an awful tragedy. And the more you read about it, the building was just decrepit. If you've been following this, on the bottom of the building, the substructure, the concrete was crumbling, the rebar was rusted and popping out. So it was only a matter of time. And where my mind goes in again, of course, there's sympathy for those involved, and it's those missing loved ones and all that. But from a investing perspective, I start to look at REITs. I start to think about it because I'll tell you, there'll be some lawsuits down the pike, and there's going to be regulation changes to all these. There's a lot of structures here in Florida, and we're at sea level, and a lot of areas we're even actually under sea level in some areas that are developed in different parts of Florida. But there's saltwater intrusion. So what I'm thinking is, what's it going to happen? So I started to take a look at some REITs. Now REITs, I went through the components of IYR today, and I'm sorting those by the biggest losers, thing about REITs, when you look at a REIT ETF like IYR, which I'm going through here, there's all different kinds of REITs. Some are hospitals, some are shopping malls like Simon Property Group, some are apartments, and some will own condominiums and apartments and buildings that are on there. It'll take a little bit or quite a bit of due diligence to see who's most exposed, but what I think is going to happen, this is going to be a setback. Number one, right away, I'd imagine prospective buyers and renters are going to have second thoughts now, on those waterfront, those close to the ocean, especially older buildings. And so, if that's an asset, a multi-million-dollar asset in your portfolio, it's going to impact rents and sales of those properties, and B, new regulations will come down the pike. Insurance will probably go up. I can only imagine, just knowing how things work. And so I'm looking for opportunities here on the short side, or if you don't short, if you think that's anti-American or whatever, that's your prerogative. You may want to use this analysis to maybe get out of some of the REITs that you've been in. So I'm looking at again, just going in no particular order and not having done my due diligence to see which ones may or may not be affected by what happened in Miami Beach recently with that building collapse. You've got to look at, from a technical perspective. Here's Annaly. Annaly's a big one. I've traded this one for many, many years, been around a long time. It just broke that trend line. You can see I have a long-term primary trend line here on the daily chart. That trend line goes all the way back. I'm coming off these lows right here, and then enough reactions to help validate it. And then most recently, you can see here that it broke down and had a little bit of bear flagging action. Bear flag consists of an impulsive leg down, that's called the flagpole, followed by a level of consolidation on decreasing volume, and then a breakdown. And your projected or measured target is the distance of the flagpole. That gives you your target. So it looks like more downside on NLY, Annaly Capital, especially considering that trend line break right there. Whether or not there's any fundamental issues with them, I'm not sure what's in their portfolio now. Blackstone Mortgage Trust. There's a bearish rising wedge. And again, I just started to do these charts. I figured, you know what, before I finish marking each and every one up, I'll get some trade setups out to you guys if you're interested in trading these. Or again, maybe you own REITs in your portfolio and you want to know, okay, where do I, I'm profitable or not profitable, it doesn't matter. Where do I stop out? Where are these things likely to fall further if they break support? And that's would be this trend line in the case of BXMT. Bearish rising wedge pattern, negative divergence, and everything else. No sell signal there yet. AGNC, this is a textbook bear flag pattern right there. You have an impulsive drop. That's your flagpole. Followed by this. This is called a bearish pennant. It's really one and the same, a close cousin, but when it takes the form of a pennant instead of a flag, and that's what you want to see, an impulsive breakdown. So all the criteria there, I don't know if you can see it, the drop was on high volume here, from here to here, then declining volume on the flag and the sell signal. So the way you do this, now you can pull out your calculator. I always thought that was ridiculous to try to calculate. I just take a trend line to get the measured target, replicate that trend line or drag it, and that gives you, again, your measured target. And I use that as a guide. And what I'll do is I'll look for price support. And if you follow me well, you've heard me say this a lot. It never fails to amaze me how often these measured targets on technical patterns align nearly perfectly with price support levels, trend lines, Fibonacci retracement levels, or other key technical levels. But in this case, let's just say that the measured target happened to go a little lower, but I had price support here at 1521, which I do. That would be my target. So there's a trade idea. It is actionable. There's a breakdown today, and another downside would be if that target is hit, and that would be my target. I would cover a little bit above that. That's about another 9%, almost 9% for that one to go. And the takeaway here is, this is not an all inclusive or comprehensive analysis of the REIT sector. I plan to study these further and update these charts, but it at least is a start, and so these are some individual REITs. IYR is not looking as sickly, so there's other REITs in there. And again, IYR, consider it like the S&P 500 of REITs. There's many different sectors and companies, some doing well at other times where others are going down depending on their industry or whatever. And again, in an all-inclusive REIT portfolio or ETF like IYR, you have other REITs that may be benefiting at this time. So you want to focus on those with the most bearish charts to go short or the most bullish charts to go long. But again, quite a few breaking down here today. Starwood STWD, that trend line, yeah, that's the best fit, and it's pretty good. It's a clean trend line. It was breakdown, backtest, rolling over. So that's actually an objective short on the rollover today. Target, I'd give you down here. First target, let's just go from there. Again, these charts are not fully marked up. You can see a lot of these are just coming off some pretty big divergent highs, and that indicates more downside, at least in these individual REITs. CSGP, there's your trend line right there. Just starting to crack right now. That gives you an objective short entry, minimum target right about here. Yep, I like that level, 79.22, and we'll stop there. Again, I'm just picking some of the ones that are down the most today, and when I have time, I'll go through all the REITs in IYR and as well as the DJ Dow Jones US REITs. I think that's DJUSRE, if memory serves me correctly. Yeah, and I'll go through all these as well, and this kind of gives you an overview of the REIT sector as a whole. All right, moving on. So those are trade ideas, and many of those that I just went over are actionable trade ideas. And again, my preference is short those individual REITs, not the sector. At this point in time, I can't make that strong a case for the sector. It doesn't mean it can't drop. It just means I can't make a strong case to short it. All right, next up, let's go back to lumber, revisit that, because I'm still liking lumber. Lumber futures, LB. Most importantly, the trend line was a little sloppy. We had that breakout right here. We kind of back tested it, went down a little, and this is our divergent line, but we're moving up. And again, that positive divergence is still in place. We had the bullish crossover on the PPO right there, like I like to see. Positive divergence on the RSI, and first target zone, second target zone. Again, I covered that yesterday. If you can't make out those levels, I'll tell you right now. roughly, I'm going to round off, about 902 up to about 934, about 111 to 191, we'll call it. And that's the LB lumber futures. Each contract represents a underlying amount of about $87,000. Keep that in mind. It's a little rich, as far as the leverage factor in lumber, and it's not as actively traded, so you want to use limit orders or IB algo. That's Interactive Brokers. They have an algorithmic program when you put an order in at a limit price, and they'll fish it, and they'll use their algos to try to get you the best fill. But other than that, the drop, like I said, it's dropped from the high right here. In just a matter of weeks, really, about 57% off the high. So the case here is both an oversold. I'm trying to get rid of that line. Oversold security. Now I'll do it later. Can't get it right now. You got to snap right on it. And I'm going to go here. This is wheat. We're going to get to wheat in just a second. Let me find lumber for you. I've got lumber. This is the one I'm looking for. Yep. Okay. This is, I believe, the one we covered yesterday. So I'm not going to go over this in detail, but this is the daily chart of lumber futures. And the gist of it is the most important things. We've got quite a bit of support. There's a big old gap, a couple big old gaps in this area we're at right here. And this is even bigger support here, about 650, and that line, if you take it all the way back, comes to this major reaction high right here. So pretty much that's my buy zone for lumber. I'd rather step in a little early, deal with a little downside than to miss a turn because we're oversold. And if you as I mentioned yesterday, if you just step in when you're oversold, even there you got in, there was a 20% bounce. There was another leg down to put in a small divergent low, and you could have still rode that out. Let's just say you didn't take profits on the 20% bounce, but you held on. If you had give yourself a wide enough stop, then you were able to catch this much larger move or any part of it there. And again, oversold right there. Huge gains to follow. Oversold. Again, all covered yesterday. You step in at these oversold readings. They're not the only reason you want to buy, and I say that because oversold can and often does become more oversold. But this is, we've been oversold for a while, and you can just eyeball these previous oversold readings and see that, you're usually not there for much more than maybe a month or so, and we have already been oversold for quite a while. So still liking lumber futures is a long right now. And what do I have next for you? Let's look at this. Let me look at my notes here. I mentioned crude. I'll just quick update there. Nothing more to update. Yesterday I said we need to take out this level 72.49. We didn't. We couldn't. We dipped below it, but it'll close right back on it, and that's still support. So a break of 72.49 roughly takes us down to 70.48 and then 66.61. Negative divergence is why I think it will happen. We just need to get it. So there's another potential shorting up. Okay, and I think I've done a pretty good job of steering the ship, so to speak, calling the bigger moves in commodities and in recent years, really, and even most recently, highlighting that, these hits to the top of the channel and back here saying, hey, not the time to be adding, if anything, time to be taking profits. And then the sell signal came saying that should most likely open the door for a move down to the bottom of the channel, which we did. Said that wasn't objective long. It wasn't, to me, screaming all in buy. I said most certainly you can take a long there and put a stop below. This is a bull market. Sometimes divergences either don't play out or they play out for a small pullback, and that was decently, decent correction right here from that divergent high. And again, this is an all-inclusive commodity ETF with many different, just about all of them. And so far, so good. We took out that gap, which is where we could have failed, but we didn't. So that was taken out. Bottom line is, with this divergent high, we still could get another leg down. I just can't tell you with the highest degree of confidence. But what I can say is, if and when this line breaks, then that will most likely increase the odds we're going to go all the way down there to that 23.33 support. Otherwise, to look at the glass half full, meaning the bullish case, this trend indicator right here, I use the white line, the 9 EMA on the PPO. That's the signal line. When it is above the zero line, the trend is bullish. And not only that, the zero line often acts as support when tested from above. and keeps you in the trend. And that's why I use that white line, because it's the last of the two to cross. If you're using the orange line, you're going to get more whipsaws. And therefore, all this is right now, we're coming in back testing. So this is the bullish scenario. If we hold that and we come on up here, and that's all we get out of that correction, and this trend continues and we remain above the uptrend line, and in a bull market, that you buy pullbacks to support. So that's the bullish case. Now, if that doesn't work out, that's why you have a stop. We break that trend line, the channel, and we also cross down below here. It's going to indicate to me that we may be in store for a deeper correction in commodities before it's time to step back in. But right now, we're above trend. And because of that, the fact we successfully held support, I told you I've been eyeing and watching commodities. I'm going to share a few right now that may be time to get back into. One of those would be wheat. This is my daily chart of wheat, the ETN that tracks wheat futures, WEAT. You just drop the H. This was a big level here. We had two big reaction highs and then a breakout. When we broke out, we put in a divergent high. I warned it at the time, said probably looking at a correction in wheat, put in negative divergence, had a correction, but we corrected back to that level. Now I know we went through there, but that's an impulsive drop, and this is what I call momentum fueled overshoot. When you have a lot of velocity, downward or upward velocity in a security like this is downward velocity, you tend to carry on through the support. And that's what we did. And then you did it again. So really, if you look at it that way, that reaction low right there set a new support level right here, which so far has held. So where am I going with all this? Well, bottom line is you're not far from it. You can take a shot here if you're long-term bullish on commodities and wheat and you think the correction may be over. I can't say that with the highest degree of confidence, but that's how bull market is. You don't always get golden entries that are perfect. You just kind of buy pullbacks. At least we're able to sidestep that correction or profit from it on the short side. And then if you take it here, you can put a stop just below that level. Let me put a line there. That's about 634, give or take. And you can see some of these old levels. These were resistance levels and targets on the way up. But I'm going to show you wheat futures, because when trading the commodities, you should always look at the futures. But before I get to the wheat futures, here's a 60-minute chart of WEAT, the ETM we were just looking at. And what you can see here is positive divergence on the 60-minute time frame, plus a downtrend line right there. That's a nice pattern. So if we pop that, these would be your next targets on wheat. Now let's look at wheat futures at CW. Let me find it down here. I've got a lot of futures going on. Let me refresh this, make sure it's up to date, which it is. And there's the same thing. We're on a 60-minute chart like we just were on WEAT. And there's your trend line. So this is a trade setup. Now you could, I showed you a minute ago, buy it on the daily chart as a pullback to support, although it's not, it's a little bit above that support. But my preference is use this as a setup. Watch this. You've got a beautiful trend line, well defined, lots of reactions along that trend line to validate it, just like you had a nice little clean trend line, similar bullish falling wedge right here. That wedge was confirmed by divergence, and then you broke out and you had impulsive buying, and that was a good trade right there in wheat. That was about a 8% rally. Now we have an even larger downtrend line, also with positive divergence. So there it is. Pop that trend line, and I could add some additional targets, but let me just hold this one for now. Let's just focus on that 717, 674 target as a potential target. So there's a trade setup, again, pending a breakout above the downtrend line on wheat futures. And if you don't trade futures, you can track them. Investing.com will give you free futures quotes. I believe Scottrade will, or TD Ameritrade, I'm sorry, if you have an account with them on the Thinkorswim platform. So you can track those, and if you get the breakout here and you don't trade futures, you can buy WEAT. I just like the futures. Give you a little more control. And you're seeing more of the trades on these. Some of these grains trade quirky hours, so know your security. I always say that, especially futures. You're going to trade them, pull up details on the contract, see what hours they trade, see what any other nuances there are to that particular security futures contract, know what the leverage factor is, and all that other good stuff. I'm going to put a line right where I'm holding here before I leave this. Let me add a line right here. I'm noticing some resistance there around 675, 237. Okay, so that's wheat. I covered DJP. Another ETF for you, one that I've covered many times in the past, is DBA. DBA is the Invesco Agricultural ETF, and so it doesn't hold. I'm sorry, it does hold commodities. I almost had a little brain fart there a second ago. I was thinking, I was about to say it holds agricultural companies. No, this one is actual ag commodities, but it's your one size fits all. Very well diversified. I haven't updated these percentages in a while, but you can see here it has live cattle, soybeans, sugar, corn, cocoa, wheat, coffee, hogs, cattle, and cotton. So very well diversified for ag ETFs. So you're not going to have things like industrial metals, oil, natural gas, and things like that. Just things that grow out of the ground, or things that eat the things that grow out of the ground. And this one, we had some divergence forming there. There it was. We had it at the highs right there on the PPO, and then we had that little wedge, a breakdown, and we corrected. So this one just hit support recently at about 1764. That's support level. So if you can buy it on or near that level, we're not too far above it now. Maybe this correction's over right here. Hard to say. I just can't tell you with the highest degree of confidence. So you could certainly take a shot if you're, long-term bull in commodities. I am, but again, I try to, tactically or strategically manage my positions. Meaning, when corrections look highly likely, take some profits, full or partial profits, or at least don't add to them at that time, and then start scaling back in on the pullbacks when you sidestep a correction. If 1764 gets taken out with conviction, we could come down here to 1663, the next target, and if and when that happens, we'll look at the charts and maybe decide if that's where we want to take a position in DBA. And one more, cocoa. Cocoa, you can trade it with an ETN. That's NIB. This is Tracked Cocoa Futures. It gives you a little trend line there as well. So what I'm seeing here is positive divergence. I know there's a lot of lines here. I have a cleaner board, a little bit cleaner. No, let me go back here. Let me turn off all these lines. I know that's probably so busy your head spinning. Let me turn off the lines and just show you the most important levels on this chart right now. So there's I'm not crazy about the downtrend line, but I am noting this positive divergence, and this is like all commodities in a bull market. This one's been cocoa. You can see here it's a volatile thing. It's working its way up, but it trades like an EKG. You have these sharp rips and dips, and so that's what you want to trade. So you can either a trend trader or investor is making money because this has been the trend, right? You're making money, but a swing trader can make many times that. You don't have to catch the top and bottom of every rip and dip, but if you can get the bulk of that, get in, be long when these uptrends are happening, or a good part of it, then close that long and or turn around and go short on the next dip, then that's swing trading, and that's the benefit of swing trading over buy and hold investing. You can enhance your gains if you can get it right. And so what I'm looking at is this wedge, the positive divergence. Now, if we continue lower, then this is the primary trend line. This is where we've been buying. It's been highlighted to buy cocoa for the last couple of years now, including this last tag of it right there. It was bullish. It was mentioned as a objective long entry right there, and we had positive divergence, and that's the run that came after it. And this is a correction. So we correct down. If we come a little lower, I'll still like it at 27.51, especially if the charts confirm. And if we happen to fall all the way back to the trend line, well, wash, rinse, repeat. That's what you do. And if it breaks that, then that's no good, and you don't want to be long anymore. It's that simple. Okay, final chart of the day here. So this is cocoa futures, and that's CC. Charlie for cocoa futures. This is a 60-minute chart, so 1 hour candlesticks, and let me make sure we're on candlesticks. Those look like bars. These are candlesticks. Almost the same difference, but there it is. There's our downtrend line, pretty clean. The breakout's kind of a little sloppy on that trend line, but we have positive divergence here. We have at least equal lows, if not slightly higher on the RSI, and higher highs on the PPO against lower lows and prices. and that is a positive divergence. So again, it's not an ideal breakout, but we're clearly above the trend line, and so that is a buy. I will list cocoa as an objective long, call it an active trade. I got away from that whole official trade. I think it was just too time consuming to try to track, and it got kind of confusing. Hey, I like this, I like that, if I didn't list the exact targets. So I'm doing these updates as frequently as I can. I'll tell you what I like and how much I like it, if that makes any sense. In other words, my convictions can be high, low. I have something called a DOC, degree of confidence. If I have a high degree of confidence in a trade, I'm going to put more money into it, and I'm most likely going to be in that trade. If I have a lower degree of confidence, if I mention the trade, I still think it's worth, mentioning, and it's something that may pan out. I just personally might not put as much, or I might pass on that trade, and then I'll leave it up to you whether to take it or not. 2447 would be my first target. 2503. You may want to allow for a back test of the wedge. If we fall back in there, that's not going to be good. We'll probably go on, make another low. We may put in another divergent low, and I'll revisit at that time if it doesn't pan out. But as of now, I think cocoa offers an objective long entry. Remember, commodities are still, it's too early to say that the correction that I've been calling for a little while has run its course. They may continue to flounder around, and so my preference right now is to be more in that hit and run mode, trading select commodities, not an all-inclusive commodity ETF. Now you can trade those all-inclusive ETFs, like what I went over earlier, DJP. You're just, you probably have to put a little more into it to make it worth your while, because the returns are going to be diluted. You're going to have some commodities going up, some going down. So if you bought the pullback to the trend line recently, it's bounced, but it only bounced about 5.5% or so. Whereas if you get in the right individual commodity at the right time, you can make quite a bit more than that. So that is it. I hope that makes sense. That was not an all-inclusive. There's some other commodities I'm eyeing right now, but those are the ones that stand out. So wheat, cocoa, lumber, and on the long side, and then crude, not a hard sell signal. I'm looking, to see a little more work there. But I'd be more apt to short, or be ready to short crude, than to go long right now. All right. And we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.